Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Aggressive growth stocks? Yeah, we have a couple to talk about now with Bill Wilton, our aggressive growth stock strategist at Zacks.com. And there's at least one recognizable name here in the two that you brought us to talk about today. Actually, they're both kind of recognizable.
Yeah.
Chipotle Mexican Grill, CMG, the ticker symbol, and we know what they do.
Yeah, it's got to be one of my favorite lunch spots. They actually spun off from McDonald's a while ago, so they've got that excellent management pedigree, the focus on efficiency. But the nice thing about Chipotle, they also have a very sense of pride along with their fresh ingredients, and it really shows because I do love the food myself.
Consistency too. I think if that's the one takeaway from McDonald's, from that franchise group for them, was that consistency.
Yeah, you know exactly what you're going to get every time you order. Anyway, enough about how excellent the food is. We can get down to some of the fundamentals. They just reported their quarterly results on February 11th, and they did excellent. Their revenues were up 12%. To just under $400 million. And the other nice thing is that they saw a 2% increase in same-store sales, which is a big necessity when you're talking about a lot of these franchises.
Yep.
Because this shows that they're expanding their footprint, but they're also improving on those existing stores. Because we hate to see it when that sales growth comes just from expanding, yet the same-store sales are a bit down. This led to earnings per share of about 99 cents. Which beat the estimates by 18 cents. So it's a pretty significant surprise. The other thing that they mentioned in that report is that they are planning on further expanding their existing locations. Right now they're at about 1,000. They're looking to add 120 stores throughout 2010. So a fairly aggressive expansion. That's over 10% increase. So they are doing well in the stores they own. And they're looking to further that footprint across the nation.
And they're actually not looking to add a coffee shop into their stores.
Surprisingly
like a
not.
lot of other people
that seems like what everyone else is doing, but they do have the beer and the margaritas that the other guys don't have.
Oh, that's probably why then,
yeah. Right now, it still remains a Zacks #1, and we're looking at about 10% year-over-year growth after those analyst estimates came in following the recent quarter that we just talked about. The market also had a pretty favorable reaction. We saw a nice jump on those, the quarterly numbers, and this is something that I'm hoping will continue. You see the MACD has crossed over, so we're looking at hopefully some continued momentum into the near future.
All right. You've also written about Celanese Corporation recently, CE, the ticker symbol, a chemical company focusing on the both consumer and industrial.
Yeah, they're pretty diversified. When you get into some of these chemical companies, their revenues came in for the last quarter, which they announced on the 9th of this month. Their revenues came in near $1.4 billion, so not exactly a small company. That revenue number was up 8%, so they're also showing, they're a good indicator of a sign of an economic recovery because these chemicals go into, like you said, consumer, industrial, just about everything. So they're seeing an increase across the board. They reported earnings per share of about 50 cents, which came in 3 cents ahead of expectations. The other nice part was they're back in the black. They reported a $5 million net income, which is up from a $155 million loss 1 year ago. The other thing I like about them, they are trading at a pretty solid value. Their PE, the forward, is about 11 times, something that's well under what the market average is right now. Also remaining a Zacks #1 thanks to some favorable estimate revisions.
You say that 73% of their sales are coming from outside of North America. Any particular geographic region that they're coming from?
They're extremely diversified as far as that goes. It's just nice to see. The reason I put that in there is because a lot of people want international exposure, so they figure that they have to buy some company that's trading on a different exchange or headquartered in a different company. This is a nice way to get dollar-denominated diversification because they're headquartered here, but when 3/4 of your business is coming from outside the U.S., that's the easiest way to get international diversification. While except for going for an ETF or some type of international mutual fund, just shows that possibility is there. something else that people can look for. And this ever-changing global environment, you can still get that by buying a company that's based here in the U.S.
Right.
Unlike Chipotle, they're not exactly flying off the chart right now, but they're seeing a nice rebound after that earnings news. Also have some potential momentum coming up here with the MACD crossover. So this one has a bit more room to grow. They're not quite setting their new high like Chipotle did.
All right. Do you own either of these two?
I do not.
Once again, I've been a big help. If you want to read more about these stocks or other aggressive growth stocks that Bill's written about recently, go to our homepage at Zacks.com. We put 4 new stock pick ideas up for you in the upper right-hand corner of our homepage. 4 new Zacks ranked stock pick ideas for you, 1 in each investing category that we write about each business day. With Bill Wilton, I'm Terry Ruffolo.